Okay, good morning everyone. Today we are going to be continuing with the handout from Monday. So before we get there, we have some administrative things to take care of. Just a reminder, if you're online, you should be signing in with your full name. Okay, Brian and Haley are with us this morning. Okay, and what's due this week? First up is the attendance quiz covering class Monday and today, and Chapter 7 homework. There is no video quiz due this coming Sunday because we have an exam Monday, Tuesday, Wednesday next week. We do not have class next week because of the exam. Do you guys want to take care of that? So remember, we do not have class next week. We have the exam. If you are in an online section, meaning section 7 or 8, you need to sign up with ProctorU at least 72 hours in advance, so you should be doing that now. Make sure you sign up for the exam Monday, Tuesday, Wednesday. Just so you know, I have another section of financial accounting, and it just started within the last week. So they have a completely different exam schedule. So if you go on there and you see, oh, there's an exam November 15th, I'd rather take it then, that's not going to work. Your exam is October 28th through October 30th. Okay, and then we do have a video quiz over Chapter 8 due Sunday, November 3rd. So our exam runs Monday morning, 8 a.m. through Wednesday, October 30th, 9 p.m. You cannot show up at 8 p.m. to take the exam. You have to be there before. If you're taking it online, they're going to make you start even earlier. So don't wait till last minute. When I say 9 p.m., that's when it cuts off. Your exam is going to submit at 9 p.m. no matter what. No one can stop it. It's going to cut off at 9 p.m. even if you've only been in it for 5 minutes. So there's that. That's our plan for today and next week, and then we'll be back in here the following, I think Monday, November 4th is our next class. We'll be back in here that day. Okay, we do have an optional review session, and that is totally optional. You do not have to attend. It is tomorrow. It is from 10 to 11 a.m., and it is online only. And the URL is different from class, so it's not morning class or afternoon class. And the recording will be on YouTube and in Collaborate within 24 to 48 hours. I'll put it up as soon as I can, whenever it's done processing. This review session, it will be Brian, Haley, and I, we will all be at our respective locations. We will not be together, and we're going to be walking through the review sheet and talking about things like that. We'll rotate the mic, and I like to think of this optional exam review session as our practice snow day. This is exactly what we'll do if we ever have a day we can't get to class because of snow or inclement weather for whatever reason. So anyways, tomorrow morning at 10 a.m., if you have time, go to it. What I would like you to do is, if you are going to go to it, go back to the announcements in Blackboard or your email and click on the sign up link and sign up. And the advantage for you signing up for this optional exam review session is I will email the link to you tonight, and I will also email you the review sheet URL, so you just get it right to you. So there's the advantage for signing up. And we'll be online. Brian and Haley and I will all have audio, and there'll be a chat window, and we're going to rotate who talks. So we'll see how this goes. It should go pretty well. So that's our review session, and that is tomorrow, and that will be available recorded if you can't make it. Okay, same handout today as we had on Monday. Today, the entire thing we're doing is we're going through questions. And you've got them in front of you. We'll get through as many as we can. If we can't get through them, I'll at least give you the answers so you can check yourself later. There is an exam review sheet available, and again, we're going to go through this tomorrow in the optional review session. You're welcome to get to it any other time. Okay. Okay, so what we're going to do is we're going to start with questions today. We're going to go through these. I have a bunch of different questions. So you would have watched the lecture, read the book already for Chapter 7, so we just have a lot of different kinds of questions. We'll get through as many as we can. I wanted to err on the side of having too many questions. We've gone through all the homework by now, both in class and in the videos. Okay, so this question is slide 13 in your handout. Okay, so the third page, if you have it if you're in front of me here. Okay, so on January 2nd, they acquired equipment for $260,000, and estimated life is 5 years or 40,000 hours. Just as a note, when they give us numbers, we don't necessarily use every single thing they give us. Like in this case, if you're using straight line depreciation is always over time. The only method that uses anything other than time would be units of production. Units of production will use hours or gallons or number of copies or miles or something like that. So if we're given time, it's straight line. Or if we're doing straight line, it's always time. So just know that when you see these questions, we don't use every number. Okay, so we have the estimated life of the equipment, 5 years, estimated residual value, $20,000. What's the book value on December 31st, 2012 if they use the straight line method of depreciation? Okay, so for this one, I'm going to warm us up here and do this one. So our depreciable value on this asset, since it's straight line, is $260,000 minus $20,000, so $240,000. It's asking for the book value of the asset on December 31st, 2012. Important to note that the first sentence refers to January 2nd, 2011. So we're talking 2 years of depreciation. So every year for this asset, we have depreciation of $48,000. And we did the same set of data. If this sounds familiar, we did one similar on Monday. So we had $48,000 of depreciation expense per year. So we have the $260,000 cost minus the residual value of $20,000 divided by 5 years gives us $48,000 of depreciation expense per year. Okay, so this is for 2 years, though, because they bought it January 1st, 2011. The last sentence in the question talks about December 31st, 2012. So there's 2 years here. So $48,000 per year times 2 years, $96,000. That is our accumulated depreciation balance. Accumulated depreciation is the running total of depreciation to date. So if we've had this for 2 years, we've taken a total of $96,000 of depreciation to date. Okay, so now the question's asking us what's the book value if they use straight line depreciation. Book value is the original cost less the accumulated depreciation. So our book value is going to be the $260,000 minus $96,000 gives us $164,000 as the book value. Okay. Okay, looks like everyone's okay on that one, so we're going to go on. So the answer is D, $164,000 is the book value. Very careful to watch on these what they're asking for. We had a similar one on Monday, but it was asking for the total amount of accumulated depreciation, and that answer was $96,000. This one's asking for the book value. Also watch what period of time it's asking for. Is it asking for this year's depreciation? If it's asking for this year's depreciation or this year's depreciation expense, that would be $48,000. So on these, you really have to watch what's being asked for. Okay, we've got lots more. Okay, on January 2nd, 2012, the company acquired equipment for $230,000. Estimated life of the equipment is 5 years, estimated residual value is $30,000. What's the book value of the equipment on December 31st, 2012 if they use the double declining balance method of depreciation? Okay, so I'm going to give you a minute or two. I'm going to walk around, so start on it. Try to at least start on it, and then we'll walk through it. Okay, on this one, we were just talking, and this was an interesting strategy. If you get to something like this and you absolutely cannot do it, but you can remember straight line, because straight line is pretty easy to remember. You can increase your odds of getting the correct answer by figuring out straight line. Now, straight line, if you figure out straight line depreciation, and you can use this, if you can do this doing straight line, then you look at the ending book value and you say, well, double declining balance is going to have more. If you did the straight line, the ending book value would be what, 160,000 we said? 150,000. So if straight line produces 150,000, then double declining balance, that has more depreciation, so you've narrowed the answer down to A or B. So it has to have, if you have more depreciation, you have lower book value. But anyway, so let's go through this step by step. The hope is that you can do double declining balance. Okay, so the first step is to figure out your factor, your double declining balance rate. And that's always going to be 2, and it's always a 2 because it's double. So 2 divided by the life, which is 5 years. So we have 40%. So we take, for the first year, we take that factor times the book value. So our rate is 40%. We're going to multiply that by the rate times the book value, so 40% times the 230,000. Remember, on the double declining balance method, we don't use the residual value in those first few years of depreciation calculation. So we just take the original cost, the book value for year 1, times 40%. So we get 92,000 of depreciation for year 1, and this is for 2012. Okay, now this is January 2nd, 2012. It's asking us for the book value on December 31st, 2012. So that is just 1 year. So we don't need to do any more depreciation for this one. So then when we talk about our book value, it's always our cost minus our accumulated depreciation. We only have 1 year of depreciation, so it is just the 92,000. So we take the 230,000 minus the 92,000, gives us 138,000 as the book value after the first year. Yeah, now the question is, what if this were 2 years? So let's go forward 1 more year. So if this were asking for what's the book value of the equipment in 2013, the end of 2013, what we would do is we would take the 138,000 times 40% to get the depreciation for 2013, and then we would subtract that depreciation from the 138 to get the new book value. So under double declining balance method, the book value drops very rapidly in those first few years. That's why double declining balance method is known as an accelerated method. Okay, done writing this down. Okay, looks like it. Okay, so another double declining balance one. This is good practice. We just went over one. This one says January 2nd, they acquired equipment for $45,000. Estimated life of the equipment is 4 years. Estimated residual value is $5,000. What's the amount of depreciation for 2012 if they use double declining balance method of depreciation? So I'm going to go quiet for a minute, let you calculate it. You should be able to do this one now. Okay, do you have this one? Okay, okay, yeah. You're making progress. Yeah. Okay. You got it wrong. Or I got it wrong. We all know. Which is possible. We've seen that. Yeah. Okay, so let me see what you did. I'm going to go quiet for Okay. Good. Okay, so on this one, oh, I guess we didn't animate it. So on what we're doing on this one, first of all, to get our rate, you're going to take 2. It's always 2 divided by the life. The life in this one is given as 4 years, so 50%. Our depreciation in the first year is always the rate times the book value. Our book value is our original price in year 1, so 50% times 45,000 gives us 22,500. So the answer is D. If we were going to figure the depreciation in the second year, we would take the 22,500 times the 50%, and that would give us the depreciation for the second year. So you just keep using the book value from the prior year. Okay, this one's nice because it's 50%, so we could take the original cost less the depreciation, and we're going to get 22,500. Okay, so now next one. Okay, we purchased a $5,000 television for the dog sitting area. It had an estimated useful life of 5 years and a residual value of $1,000. What's the amount of depreciation expense for 2013, which is the second year of this asset's life using the double declining balance method? Okay, so double declining balance method, second year. So this one goes a little bit further than the last one. I honestly didn't memorize which number it is, so, and I'm really not good.
Wrong.
No, it doesn't mean you're wrong. It's just I don't memorize the answer ahead of time, so I'm just as surprised as you are.
Oh, okay.
And I can't do math in my head. I mean, I can do I can do 10% or something, you know, really. Yeah, yeah. But don't ask me, because invariably the more people I'm in front of, the worse my math skills get. Okay, so that's why it's all orchestrated ahead of time.
Mm-hmm.
Okay, so, oh, do you have polling? Okay, yeah, we'll do polls from this point forward. Yeah. Okay, so first of all, double declining balance, our rate times the book value. Our rate is 40%. The 40% times 5,000 is 2,000. That is our depreciation for year 1. So if we're labeling things, that's depreciation year 1. Now this is asking us, what's the depreciation expense for year 2? So what we need to do is we need to take 40% times our book value for year 2. So our book value for year 2 is the 5,000 cost minus the depreciation in year 1, so it's $3,000 times the 40%. So we have 1,200. So you were right. See? Okay. So the answer is 1,200. Okay. Okay, well, the next one. Now we're all on the same page. Okay. Let's look and see if people are still ready. I'm going to leave you guys. I'll be back. Okay. Next one without calculations. Okay, I'm going to walk around and poll people on this one. Oh, there's a typo on that. If an expenditure is capitalized, it is A, debited to an expense account, B, debited to an asset account, C, credited to an asset account, or D, credited to expense account. So take a minute. I'm going to be walking around and polling people in just a minute. So commit to your answer. I have an answer, E. Yeah. You have an answer? You think it's C? Okay. Okay. If an expenditure is capitalized, it is, and we have a C. C? What do you think? You don't know. Okay, okay, that's fine. That's legitimate. Yeah. What do you think?
Go with C.
C? Because they said it, yeah. John? B. Okay. Okay. You're what? You think B. Okay, we're building some momentum here. Okay, you know I'm coming over here now. Okay, what do you think? You're going to say B. Wow, we're getting the tide is stemming over to B. What do you think? C. Okay. D. Did you say D? As in, you said B. B. C. B. Okay. Okay, Brian, what do you have? Haley, Brian? What? Can you say how many A's? 4 A's. Now we have 9 B's, 7 C's, and how many D's? 3 D's. Okay. I got predominantly B and C, and an E. I have the E. Yeah. Well, yeah. Yeah. So let's talk about what happens here. If an expense is capitalized, what that means is an expense being capitalized means that we're saying if an expenditure is capitalized. So this is, we put an addition on our showroom. Okay, so this is something that's capitalized that lasts more than a year, that's not routine maintenance. So let's say we put an addition on our building, okay? So that, we would capitalize it. So when we put that addition on our building, we pay cash for it. Let's assume we pay cash. It doesn't matter if we pay cash or pay on credit. What's going to happen to cash in that case? Decrease cash, so we will debit or credit cash? Credit, right? So we would credit cash. So then what's going to happen? What are we going to do to the debit side? The debit side is going to be what we do. If we capitalize it, it's going to go to an asset, right? So in this case, Alyssa was probably the most right of everyone, right? We don't have an E, but really we need to credit an asset, which is cash, which I think is why people were choosing C, right? The answer I'm looking for is B, okay? But here. Yeah, I understand why. So you're not going to see this question. Well, yes, I'll say that. If you see it on an attendance quiz, okay, which you might, the answer is B, and I'll tell you why. That's the better of the answers here. The best answer is debited to an asset account. The asset account it would be debited to would be either, you know, building improvements or building or equipment or whatever it is. So that would be the debit. We would be increasing that capital asset. Now, we could make an argument that it would be C, we would credit it to cash because we're taking it out of cash, and that indeed is the case. I would still say B is a better answer, and this is what you get from coming to class or viewing this video. This answer, if you get it on the attendance quiz, is B, definitively, period. Yeah. There's no debating. It's not C, it's B. Even though we can make an argument for C, the one I'm looking for here is B. Yeah, it's that way because I said it was that way. But anyways, but you understand, we're going to debit the capital expenditure. The point of the attendance quiz is to see did you come or did you watch the video. And in this one, you could, you know why I'm asking for B. Okay? So everybody clear on B? Okay. Next one. Okay, so we recently paid to have the engine in a delivery van overhauled. The estimated useful life of the van was originally estimated to be 4 years. The overhaul is expected to extend the useful life of the van to 10 years. Is this overhaul regarded as a revenue expenditure, B, a capital expenditure, C, equity expenditure, or D, matching expenditure? So I'll be around to ask in a few seconds here. So what's your answer? You're going with B as a guess. Okay, what are you going with? A or C. Okay, so we have a B and an A or C. What about over here? B? Okay. What about you? Okay, not going to commit. Okay. B. Okay. You like C. B. B or C? Okay. A. Okay. Okay. C. B. 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 Okay. What do you guys have? How many A's? 3 A's. 15 B's. 3 C's. 0 D's. Okay. So the true answer, the right answer, is B. It is a capital expenditure. When you see the word capital, that means that we are not expensing it. It's becoming an asset. It's called capitalizing it. Okay, next question. Company A replaced the tires and painted several of its vehicles during the year. These costs should be A, debited to equipment, B, depreciated over the life of the vehicles, C, credited to accumulated depreciation, or D, debited to repair expense. I recorded E718A. This is addressing the comment. I recorded that, and that I'll be sending out that link today. So. Okay, coming back here. On this one, what do we think? D, debited to repair expense. Okay. D, D, D. Lots of D's. Okay, so let's try something new. So Brian, go ahead.
Hello? Okay, so we have 4 A's,
0 B's,
1 C,
and 13 D's.
Okay. That would be D, routine maintenance, debited to repair expense. Okay. Okay, now another one. Let's say we have a capital expenditure. So I always like to picture, when I think capital expenditure, I think let's put an addition on a building. So it's something big usually and has a long life. So let's say we put an addition on a building and we expensed it right away. So we just, instead of capitalizing it, we put it to expense. So when we do that, what does that do? Does that overstate assets and overstate equity, or B, or C, or D? So again, read those answers carefully, give it a shot, and I'll be around to solicit answers. Okay, so what answer did you say?
I have,
You have B.
yeah.
B.
So I didn't write that.
Okay. I was like, I don't see. In your head, you have B. Okay. What about you? You like B. Okay. You like B also? B. Okay. What do you think? Okay, everyone likes B. Okay. What about you, Georgie? B. Okay. Okay. So I've gotten all B. So what about you guys online?
We have gotten 1A, 15 Bs,
1 C, or 0 C's now, and 1 D.
Okay, so your predominant answer was, what was your predominant answer? B. Okay. Okay, and it is indeed B, because we have this one, you could pick out overstate expense right away, because we're saying we expensed it in error. So we overstate expense, so the only one there that overstates expense is B, but then you'd have to also do the other side. If we have too much expense, it reduces net income. So very good. That's very good to be able to walk through that one. Okay. The accumulated depreciation account is an income statement account. True or false? What do you think on this one? True? That was like hesitant true.
Yeah.
So a little bit true? A little bit true. Okay, let me go over here. I'm going out of camera range for a moment. Okay, I don't want you to think I forgot you over here. You think you can move, but you can't hide. Okay, so what do you think? You think it's true? Just true. Okay, because there's no penalty if you're wrong. Okay, okay. Okay, you're going to say true?
Yeah.
Okay, okay. What about you, John? You think it's false? Okay. You don't know? Okay. You're going with false? Okay. Do you know why you're going with false? Tell me why. What about you? Do you know why? Good reasoning. Good reasoning. So just don't do the mic, but how many true false do you have? 12 true, 6 falses. So in this case, the answer, the way you reasoned it through does work indeed. This is a balance sheet account, and he was saying that he thought it was false because it said accumulated, and that's a good way to think about it. Accumulated means that it's for more than one period. An income statement is for one period of time. So that was a good way to think about this, but know that accumulated depreciation is a contra asset. Okay, it reduces the equipment account or the asset account that it goes with, and it's a balance sheet account. It belongs on the balance sheet. But that's an excellent way to think about it, that accumulated is more than one period, income statements only one period of time. Okay. Okay, another one. Book value equals the cost of the asset less the total accumulated depreciation. True or false? Okay, so what did you say? You would say true. Okay, what do you have online? 20 trues, 1 false. Okay, so that's really good. This is true. Book value is the original cost less the accumulated depreciation. We don't even need that word total in that sentence. Accumulated depreciation, total accumulated depreciation is a little bit redundant. Total means running total. Accumulated depreciation means that running total depreciation. Okay, so that one's true. Okay. Think carefully about this. At the end of its useful life, the book value of an asset must be 0. And I am interested to get your opinion, so I want everyone to commit to a true or false, and then we'll see where we go with this. It's so nice to be able to walk all the way over here. So I'm going to start with you guys. What do you think, true or false? False. Okay. Okay, false, false. True, false, 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 false. Okay, so you have a whole bunch of falses up here. Did you say false? Why? Okay, a gut feeling for false. Okay, anyone that said false, want to explain why? Residual value. I feel like going ding, ding, ding. Yes, yes. What do you have percentage-wise online? 22 false, 4 truths. Excellent. And absolutely, the answer is false. And the reason it's false is because residual value. At the end of the useful life, the book value of an asset will be its residual value, its salvage value. Do we have more? Oh, still rolling. Okay. Okay. Okay, now, another one. The 3 depreciation methods allocate different amounts of depreciation to each period that all result in the same total amount of depreciation over the life of the asset. True or false? What do you think? Okay.
Not sure.
True? True. Okay. I'm going to go, I want to explain. This one is absolutely true. It's true because it doesn't matter what method you use, you are depreciating it down, the asset down to residual value. So it's just a matter of when you depreciate things. And the reason you care about when you depreciate things is from a, what's your net income? Do you want more expense early on? Do you want less expense? From a tax standpoint, you want as much expense up front as you can get. Number one, money has a time value. All other things being equal, I would rather have money today than money a couple years from now because money's worth more now. I can invest it. But the other thing, the other reason I want money now is they can play with the tax code. I would rather have the guaranteed deduction this year than to plan on having that same deduction 4 years from now after they've changed the tax code. So from a tax standpoint, you would want more depreciation early on, but there's very valid reasons for companies selecting different methods. Once you pick a method, you stick with it though. So this one's true. Okay, another one. It's illegal to use one method of depreciation for financial purposes and another one for tax purposes. So the question is, is it illegal to say I'm going to use straight line for my books, I'm going to use double declining balance for tax? Is that true or false? Is that illegal or not? Do you have an answer? You don't know? Okay, that's valid. You guessed false. Okay, so you're saying it's legal. The way it's written,
Yeah.
Okay, so you're saying it's legal. So let's just do that. Is it legal or not to use 2 different methods? Okay, you think it's illegal? Okay. What do you think over here? Legal or not to use two? It's legal? Illegal? Okay. What do you think? You think it's legal? Okay. What? Illegal? Legal? Legal? Illegal? Legal? Okay, so I have kind of weighting towards being legal. What do you have? Why don't you go with the mic?
Online we have mostly that it's illegal, so true. There's some falses though. Okay, so this one is indeed legal. It is false. It is totally legal. You pick a method for your books. Typically companies pick straight line for their books because it's easier to do. This is not a trivial matter. This is pretty major, companies having assets and having to depreciate them. So typically they select straight line for a variety of reasons for their books, and that's what they report on. In their annual reports, when they issue their annual report, their financial statements for the year, it tells you what method they use. And most companies, very, very many companies, majority of companies, use straight line for their book purposes. So when you see a financial statement for a company, most companies are using straight line. Now, the tax code is the government saying, here's how we're going to collect revenue, and here's the rules. So you follow what those government rules are. The government does not tell you how to prepare your financial statements for users. That's generally accepted accounting rules. That's the SEC. They're separate from the IRS. So we have the IRS and Congress figuring out what you're going to do on your taxes. So the two systems are completely different. You do not use the same method for both. But with both of them, you pick a method and you stick with it. It is possible to change your method, but it requires a restatement of all your prior statements, and you have to show that difference and why, and justify why you're changing methods. So you have one method for books, you have another method for tax purposes, and that's totally legal and legitimate. I think this one looks vaguely familiar, right? I think we did it. Here. We did it on Monday, okay? So, yeah, I like this question a lot. Yeah, it's just going to keep showing up. Yes, so, yeah, copy, paste, copy, paste. So I must really like this question. So, so nice one to practice with. Yeah. Yeah. So, yeah, so. Oh, and look, I did this one again too. And the next one. Okay, so that's nice. See, we don't have as many as you think we have. Okay. But what's interesting is I animated them differently each time. So. Okay. Well, look at that. Okay. Look at, we're just flying through class. What? Okay. We'll be done with class at this rate. Okay, now I think the next one's new, right? Look, okay, now I think we're out of duplicates. So now what question are we on? We're on the last page. So we only have 5 left, right? Oh, perfect timing. Great, excellent. See, I knew what I was doing. Okay, 2, account for the disposal of a plant asset. The cost of the asset and its related accumulated depreciation are removed from the books. True or false? So when we talk about disposing of plant asset, this means we sold it, we threw it away, we got rid of it somehow. So what happens when we do that? In this case, to account for the disposal of plant asset, cost of the asset and its related accumulated depreciation are removed from the books. True or false?
Okay, I'm not moving. I'm just going to ask. You said true. What do you have online? Mostly false? Well, I have a true here, so we're going to see if you're right. Okay. Okay. When we get rid of an asset, we have to get rid of the cost of that asset from the asset account, and we have to get rid of its depreciation out of accumulated depreciation. It makes sense. On our books, we don't want to keep carrying an asset we don't have. So when we get rid of it, we want to eliminate the cost of the asset and the related accumulated depreciation. So those get backed out when we dispose of an asset. So we sell it, we trash it, or do whatever. We're no longer using it. It gets removed from the book. So that is true. Okay, equipment costing $37,450 with a book value of $18,410 is sold for $20,000. The journal to record the sale will include A, a debit to cash for $18,410, B, a debit to accumulated depreciation for $18,410, C, a debit to gain on sale of equipment for $1,590, or D, debit to accumulated depreciation for $19,040. Yeah, I think. Okay. Now on this one, the way I approach this, because remember, I don't have the answers in front of me, and again, I said I'm not very good at math, so I just asked someone to do the math for me in my head. So when I go through this problem, the first thing I'm going to do is I'm going to eliminate obvious choices that are obviously wrong. So equipment costing $37,450 with a book value of $18,410 sold for $20,000. So how much cash did we get? $20,000, right? Okay, so we got cash of $20,000. Can the answer possibly be A? No, so we can cross A off. We know it's not A. Okay. Now, let's skip to, well, let's do B. Okay, accumulated depreciation on this equipment, this actually we have to solve for it, okay? Accumulated depreciation is the cost of our asset minus accumulated depreciation is the book value. So if we're given book value and the equipment, we can take the difference between the two to get accumulated depreciation. So accumulated depreciation is what we said, $19,040. Okay? So if you take $37,450 minus $18,410, you get $19,040. Okay? So knowing that accumulated depreciation is $19,040, can the answer be B? No, it cannot be. Okay, and continuing to work our way down, C, debit to gain on sale of equipment. I don't even need to do the math on that one to say that that one's wrong, because gains are not debits. Expenses are debits. So if we're going to have a gain, we're going to credit it. So it cannot be C. So now we get down to D, debit to accumulated depreciation for $19,040. That is the right amount, but we would debit it because accumulated depreciation, being a contra asset, has a normal credit balance. So to wipe it out, we would debit it. Okay. So we would have D, debit to accumulated depreciation for $19,040. So many of these you can eliminate one or two or maybe even three answers to get down to what it has to be. Okay. Okay, so That's how I calculated accumulated depreciation. Cost minus accumulated depreciation equals book value. We can fill in the numbers we have, solve for accumulated depreciation. Okay, so next one. Accumulated depletion reduces equity as this account is a contra revenue account. True or false? I'll go with that. Okay, on this one, accumulated depletion, we've not talked about that. Accumulated depletion relates to natural resources. So this, whenever you say accumulated depreciation or accumulated depletion, it relates to the asset on the balance sheet. So we have the asset carried at the original cost, and then we have the accumulated account, which is a contra account that carries all the accumulated depletion to date or accumulated depreciation to date. So if this accumulated whatever account is matched with an asset, it has to be a contra asset. It's not a contra revenue. It's a contra asset because it's matched with an asset. In this case, it's matched with a natural resource account. Okay, natural resources are reported in the intangible asset section of the income statement. True or false? I heard a false. Okay. True or false? Okay. Okay. Yes. Yes. You have no idea? Okay. Okay. False. Okay. False. False. Why? Good. Good. Yes. Okay. So I have a bunch of falses. Okay, so a bunch of falses, nice scientific measurement. We've both done that. So this is indeed false, and excellent explanation. Natural resources are not intangible because we can touch them. Intangible assets are things like copyrights and patents and things like that. So this is false. Okay, then I feel like we should have a drum roll, right? Is this the last one coming up?
Yeah.
Hopefully it's not a duplicate. Okay. All of the following are classified as natural resources and are depleted except for A, land, B, timber, C, minerals, D, oil. What do you think, Alyssa? A? Okay. You have a lot of answers online? Okay, 12 A's and then one of each of the rest. Okay, and the answer here is indeed A, it's land. Land is never depreciated or depleted or anything. Land is just an infinite asset. Okay, with that, just want to remind you of a couple things since we have a few minutes remaining. We have an optional review session tomorrow. It is online. We are recording it. If you want to attend it, go into announcements and sign up for it so I can send you a review sheet tonight and a link to it. I will put that recording on YouTube and in Collaborate within 24 to 48 hours. And then, see, we had a handout today and what to do this week. Okay, so we have an attendance quiz today that covers today and Monday. It'll be available after 5 p.m. on Wednesday. Chapter 7 homework. Remember that there is no video quiz this week. We have an exam Monday through Wednesday next week. It shuts off Wednesday 9 p.m. Eastern Time no matter what. So you want to be sure to get in before that. If you're on section 7 or 8, you need to sign up for it at least 72 hours in advance. Video quiz 17 will be due Sunday before. I won't see you in class again until November, which seems really weird. So anyways, so good luck with the exam. Email if you have questions. I hope to see you online tomorrow with the online review session, and I'll see you in a couple weeks.